Good morning. If y'all would let me know that you can hear me loud and clear. Some things going, make sure that my ugly mug's up there. We don't have the cat yet. She's AWOL right now, which I hope she stays that way. Yes, good afternoon, I guess, for some of you, huh? We shall see if she stays away or if she shows up. So I ran her a little bit this morning, so hopefully I burned off most of her energy. But as long as she doesn't come and sit down on my hand. That was crazy. I'm going to show you. I had a picture of that. She'll literally just comes, my hand's on the mouse. She'll come and just flop down on top of it. So I can barely even move my hand. It's crazy. But she's pretty fun. But sometimes she's a nuisance. So anyway. Probably. Yeah, as soon as she shows up. Still working on my coffee. This is only, it's number 3 or 4. I don't know. We'll see. Probably had one more after this. The late night last night. So I am not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading here. We're gonna have a little fun. I see a lot of familiar names. Some of you, this will be somewhat remedial. Reminds me, there's a school bus picking up all the kids. And forgot to turn my phone off. I heard the screeching tires. It sounded like my phone dinging. So let me shut that off so I don't get interrupted here and have any nuisance people blowing up my phone. Work night. Yes, not a fun night. What is a fun night? I don't know what a fun night is. I take that back, actually. I've been hanging out with my neighbors more, and they're fun. So I went over to work out too. He's a huge guy. He's like 6'4". He's probably 300, 320 pounds. He's like a rock. That's what I would compare it to. Actually, it's probably a good analogy. He's bald too, like, shaves his head. But yeah, he's just ripped. And he's got a super nice gym in the garage. Mine's mediocre. I've got one that works, but I haven't been using it lately. But he's got a really, really nice gym with lots of great equipment, different stuff. So I went over there today, and I've been slacking lately. I show me what you do. Obviously, it's working for you. But anyway, so hey, Brenda. So anyway, it's been fun. So here's all this stuff coming up. We got premium online workshops, Inner Circle, 22nd and 24th. And then Mastermind Group is the 23rd. Trade Watch Alerts Q&A, June 5th. Trading You, June 7th. I don't remember if that's the one I'm doing or not, but hey, Andres. Power Hour, of course, Mondays at noon. Memorial Day. That's right, Memorial Day is coming up. I had somebody mention that yesterday, and I had forgotten about it. So then Trading Coaches Playbook, of course, this one every week. Protect, preserve, and win in uncertain times. It is a little uncertain, isn't it? You'll see the market just trail off here about 45 minutes ago, just started to sell real quick. And it was not sure what's happening. I saw gold. Well, yeah, gold spiked because gold was back in 1960 and it just went boom to the upside, like 20 points. AEM just went crazy to the upside. So, oh, you know what? That's a good point. I'd forgotten about that. Powell is speaking. Powell and Bernanke are speaking. And it is right around the time. So I bet one of them said something that spooked the market. That's a good point. I'm glad you reminded me of that. Thank you. So, oh, awesome, Jennifer. That's dedication right there. That's somebody that's committed. Said, I'm listening via car for as long as possible. So, which is the beauty of technology today, right? You can have your phone going, and hopefully you're driving safe. I know people freak out because sometimes if I take a road trip, my phone thing is right next to the steering wheel. I say something about watching YouTube. Like, you watch YouTube while you're driving? Like, well, I'm not really watching, most of it listening, but I can see it out of the corner of my eye. So, sorry, I was gone. But then we got power option plays, of course, Tuesdays and Saturdays. Cover Call Explorer Thursday. Evening Think Tank with Brandon Monday, Wednesday, Thursday, and Vegas Spread Master with Sean Monday, Tuesday, and Friday. So, and then of course you can find us on all the social media platforms. And Of course, there's all my different stuff. We got the small accounts big return, which we just talked about, I think last week, the week before, weekly whispers. For those of you that don't have that or haven't been in that, you will have a little bit of a preview today, which is kind of what we're doing. It's I'm going to do kind of a repeat of what I did for the Patterns in a Flash subscribers, which is this is a training tool. This is the analysis part, right? Weekly whispers is every single week I give you all my analysis. And I'm going to show you right now what that looks like. Well, in a few minutes. We got a little housekeeping to do first. Make sure we get our mindset in the right place, because that's critical, right? If you haven't figured that out yet with regard to trading, it is the most important thing, is having your mind in the right place. So let's go there. Some of you have seen this before, so if you know the answer to this question, it's not really an answer. It's just, would you like to have 95% winners? Yes, no, maybe. There she is. She wanted to hear you guys' answers. Yeah. Yeah, that's a good way to put it. You want them, but you don't need them, right? Yeah. See, some of you are cheating. You've all seen this. I've used it before because it is. Yeah, she is. I don't know what she's going to do, but obviously she wants to make herself known. As long as she doesn't knock that Einstein painting off. She did that last week. I was just sitting here, no idea, and all of a sudden, boom, I get whacked in the head. She had pushed it over. She just grabbed it with her paw, I guess. I didn't see it, but I was pretty mad at her, actually, because it didn't feel good. But you still say yes. I mean, who wouldn't, right? I mean, I would love to have this too. And it's not, I mean, the answer is yes. We'd all love to have that. Is it realistic? And is it necessary? I think, yeah, Will said that. Yeah, want them, don't need them all. I think that's the best way to put it right there. Is you'd love to have 95% winners, but is that possible? And here's the reality. What happens if 95 of those winners are just $1 each, and the 5 that you lose on, you lose $100 each? Now it's terrible, right? If you were thinking, yeah, I want 95% winners, all of a sudden when you put reality to it, because how many of you have been down this road? You cut your winners short and you let your losers run. It's the opposite of what you're supposed to do. But this is where most people start. I did too. And I used to think, when I started, I fell into that trap as well. So you got to have at least 50% winners. Otherwise, you're going to be losing. And nothing can be further from the truth. It's a myth. It's not true. It's not necessary. Well, let me clarify. Part of it depends on your strategy. I trade directionally. 99.9% of my trades are directional. If you're doing spreads, it's a little bit different. It's a different risk reward profile. And it's a little bit different ball game. But it still is in the same, conceptually, it's similar. Okay. What's the other qualification? So the reality is you actually want the flip of this. I was tempted to ask it a little different, since I know many of you have seen it. It's like, would you like to have 95% losers? And then you lose $1 each, and you have 5 winners at $100 each. Now you're only 5% accurate, but you're still up $405. It's just accounting, right? It's just numbers. You can spin it however you want. But the beauty is, this is not necessary. You don't have to be that accurate, that good. In fact, anybody out there, and you'll see trading coaches everywhere. I just saw one the other day, this lady's promoting her product on Facebook, whatever it was, her training, coaching, whatever it is. You need to be 80% right. And I just scratched my head, and I'm like, whatever. I don't even pay attention anymore, unless you're talking about something different. Like I say, there's some spread strategies, some things where you can get to that. That's possible. Because with a spread, you walk in with about a 70% chance of winning, right? Because if the stock, as long as you're going out of the money, right? As long as the stock doesn't move against you, and usually you have a little cushion, right? So 2 out of 3 chances, you got up, down, and sideways, right? If you do a bull put spread, if the stock goes up, you make money. If the stock stays sideways, you make money. And if you're somewhat out of the money, then stock can go down a little bit and you still make money, right? So 2 out of 3 ways guarantees you a winner. And the third way, if it drops a little bit, so that's the other 2.4% or 3.4%. So with spreads, just by the nature of spreads, you step in with about a 70% chance of ending up profitable. But there's the flip side of that coin too, where spreads, you might only be collecting 20% premium and you have 80% risk. If you get a $1 credit on a $5, or $1 credit on a $5 spread, if you have 4 go against you, or if you have, how do they do that before? No, you have 1 go in your favor, or 4 go in your favor and 1 go against you, and you break even. So you have to be 80% right on spreads just to break even. That's one of the reasons I'm not a huge fan of spreads. I think in the right situations, I think in certain situations they're good. I think the last 2 months, condors have been spectacular. I'm kind of cranky I didn't do more of them, because I remember saying 2 months ago, I think this market's just going to go sideways for a little while. I don't think it's going to trend at all. I don't think it's going to move big. And it really hasn't. There's been a couple of big days up and down, but for the most part, it's been sideways. So spreads are a little bit different animal. And like I said, I've played with them for years, and it's not my style. If you love spreads, you use spreads, I'm all for it. And if you have a system and a strategy that works for you, have at it. It's just not my style. Sorry. It's not as bad as it was the other day, but yes, when the winners pay off more than the losers, the percentage, your batting average is not that critical. And that's one thing I use all the time is baseball, right? I mean, the age-old question, what's the difference between a 290 hitter and a 300 hitter? I mean, it's realistically only 1%, but it's also the difference between a 7-figure salary and a 6-figure salary. It's the difference between who's that guy and, oh, he's a Hall of Famer, right? That little tiny tweak makes a big difference. But a 290 hitter means he's only getting a base hit 29% of the time. 300 hitters, 30% of the time. That doesn't seem that great, does it? But in baseball, in professional baseball, that's what the best of them do. They only get a hit 30% of the time. And the beauty is, trading isn't a whole lot different. Some of y'all seen this. If you're not familiar with risk reward, which I think most of you probably are, right? If you put $10 in a trade, you're going to stop out at 9. You got potential risk of $1. Put $10 into a trade, your target's 13. You got a potential profit of $3. So that's 3-to-1 risk reward, right? So we have 3 times as much upside as we do downside. Now here's, oh, dang it, this thing doesn't annotate. So here's what happens if you do a series of trades. Okay, you take trade number 1, you lose on the first trade, you're down $1, right? You're 100% negative. Trade number 2, same result, you're down a net $2, and you're negative 100%. But trade number 3 goes in your favor, you make $3. Now you're up $1, and yet your batting average is only 330. You're only 1 for 3, but you're still profitable. So why do we go after these huge 80, 90, 95% success rates? I only need to be 33% right. Oh, until trade number 4 comes along. Now we're back to break even. Well, look at break even. Break even is 25%. Trade 5 and 6, same thing, but trade number 7 goes in your favor. You're still profitable at 28.5%. So 28.5% of the time, your trades worked out the way you wanted them to, and you're still profitable. Some of you might be scratching your head going, there's no way. That can't be right. I've been showing this for years. And 2 weeks ago, I changed it up a little bit and had a little fun. We're going to do that in just a minute. Right after this commercial break. I'm just kidding. Oh, the good old days. When was the last time you ever heard that? I mean, who does anybody watch the old school tape? They used to say right after this commercial break, we'll be back. I guess on traditional TV. I don't watch really any traditional TV, so I don't even have cable. I don't want it. So, but yeah, I haven't heard that. I haven't heard that phrase forever. But here's something that is critically important to distinguish. Okay. You have 2 different roles to play. Yeah, but wait, there's more. That's another one. I think I just used that last week, didn't I? You have 2 different roles in this business. You have to be an analyst and you have to be a trader. And if you're familiar with big firms, usually what they have is they have the analysts over here on this side of the concrete wall, and they have the traders over here, and they do not get to talk or communicate in any way, shape, or form. There's those that analyze the charts, they analyze the trades, whether it's fundamentals or charts or however they do their analysis, right? Some of them are building systems, that are all based on data, these algo systems. And then they send it over to the traders, and the traders' responsibility is just to trade based on the analysis that's given to them. The analysts essentially develop an opinion and a direction and a plan, and the traders do nothing more than execute that plan. The challenging part, and this is where some of you are probably struggling, and we've all been down that road, is that you have to wear both hats. And it's really easy to blur the line between those two. And not recognize that you're playing two different roles. Oh yeah, Ryan's tripod thing. I forgot about the third one of that, and I don't remember what it is even, but yeah, I try to keep it simple, stick to two. Observer, thank you. The important part is distinguishing the two. And here's the hard part is when you switch to the trader part is, see, you're the analyst, right? In those big firms, the other guy was the analyst. That way, as the trader sits there and says, that's not my fault. I didn't lose money on that trade. That was the analyst's fault. He gave me the analysis. I just executed what he gave me. See, trying to do both roles is where it becomes challenging, because when you're in trader mode, it's really difficult from an ego perspective to tell the analyst, you're an idiot, you got it wrong. Because the trader and the analyst are the same people. It's you, right? And now you're in trader mode, and you look at the analyst, and you look in the mirror and say, you're a moron. You got that wrong. That thing didn't do what I expected it to. We don't do that, right? That's one reason it's so difficult to trade individually, right? Without having two different hats. And that's why I think it's so important to not only recognize this reality, but to recognize what mode you're in. Are you in analyst mode, or are you in trader mode? I'm only in analyst mode. Well, I take that back. The bulk of my analysis I do once a week. I do it on Thursdays, right? And that's when the weekly whispers, I record those. I recorded it last night. I do my analysis. I come up with all my plans. Here's the patterns I see. And then I draw the plans on. Here's support, resistance, trend lines, patterns, measured moves. Here's my stop. There's the target, and there's the entry. And boom, takes me 2-3 hours to do all that. And then the rest of the week, I'm effectively just a trader. The only analysis I have to do is adjusting the plan based on what is happening now with that particular stock. So I tweak my analysis a little bit as far as what's happening, especially, and most of the time I adjust my analysis is only if the trade is going in my favor. Because if I get in and then within a day or 2 or 3 days, it turns around and goes against me, there's nothing new to analyze, right? But if the stock moves in my favor and it's halfway to the target, now I got to make a decision. Do I peel some off the table? Do I scale out and take 20% or 40% or 50% of the trade off the table? Is there any kind of sign or indication that this move is not going to last? So maybe I take the whole thing out. Or is there so much momentum and so much energy in the move of this thing that it makes sense just to leave the whole thing there? I'm very confident it's going to continue in the direction it's going. So I don't want to take anything off the table and maximize my profits. So the interesting part is that you start off in the analyst mode, and then you go to trader. And again, the only time I ever shift to the analyst mode, or I should say most of the time, not only, but most of the time I shift to analyst mode is only when a stock's working out. When a trade's working out. Does that make sense? Yes. All right. Make sure that's unmuted. This cough's getting annoying, but it's still with me. So here's what we're going to do. We're going to go and take all 29 candidates I found for this upcoming week. We're going to look at them real quick. And then we're going to do a coin flip. And if you haven't seen it, you can get online and do a coin flip thing. And heads is going to be a winner, tails is a loser. And then random chance is going to tell us if this 3-to-1 risk reward thing actually works in reality. That was funny. Was that your note? I saw your note, Will. That was hilarious and awesome too. So let's go over there's the charts. Let's close that down real quick. So this is my list of candidates for this upcoming week. This is what I will be watching. And it's a very mixed bag. Some bullish, some bearish. For the most part, most things have been bearish the last year and a half. There's only been a few weeks where there's been more bullish trades than bearish. But there's Alcoa, right? And this is actually, it's not real time. It is streaming. You got to distinguish, right? So what is it? It's 9:21. So this is updated right here in the upper right corner. You can see 9:07. It's about a 15-minute delay as far as showing the data on the chart. So it's streaming data, but it's got about a 15-minute delay. So that candle that you see there on the right, that's actually what's happening with Alcoa, right? We can look at a real-time chart. It should see the same. There's a real-time chart. I mean, this is a streaming chart that's also real-time. This is Alcoa. You can see the bottom chart is the daily. So you can see the zoom in there. That's the candle of today. It's actually ticked up just a little bit in the last 10 or 15 minutes. So just so you can see what it is we've got going on here. So that was Alcoa. Was looking for a bullish trade on this, but obviously, you know, with what's happening right now, who knows what may or may not happen. It could turn around by the end of the day and rally, right? It could give us one of these right here, little hammer pattern. Well, it wouldn't be a hammer there, but AGL, and those of you that have weekly whispers, you get a little preview. You can speed up when you go through it then, right? Y'all do that? That's one of the reasons I like YouTube, is I can go speed up the playback time. So a lot of the videos I watch on there are like 1.5 speed. And plus it helps my ADD because I'm a little, and if they're going too slow, then my mind starts to drift. And it's like, oh my gosh, would you talk a little bit faster? So not only does it help the ADD thing, but I can get through it faster, right? I can listen to 50% more material, whatever it is. So, and I watch a lot of kind of some weird stuff. I've gotten into cooking and grilling and smoking and stuff the last several years. But there's AGL, little head and shoulders on AGL, looking for a bearish. It's already down below it. So this one may not materialize and give us an opportunity to get in. Arista Networks. This is a bullish little double bottom, right? Looking for a possible bullish, possibly close that window right there. What are the odds that this one closes that window and fills it and the trade works out? Let's say we get in at 146.53. In fact, I'm going to put that out there right now. I'm going to just, and this is the other thing you can see. Okay. If you don't use Omega charts, it's this part of it's killer right here. Okay. Is I'm going to go put a buyer. You can do, it's a practice trading platform, right? And they do have options. I tried to make that work, but it just, for whatever reason, I tried placing a few words with options and they just weren't filling. And I don't know why. It's not something that I don't know how many people use it. It's not something the company puts a lot of effort or energy into. I think they built it and the servers are there and it maintains itself. But like I said, I don't think it's probably not a profitable thing for them. So I don't think they put a lot of energy into it. But it's super nice, right? Because we can come in here and it's a great way not only to practice trade. The practice trading part I'm not as concerned about, but it keeps data. That's what I like about it, because I don't like to track things, right? Punching everything into Excel is kind of a nightmare. So we're going to put a buy stop in this account, the Weekly Whispers account, enter long. We're going to do just 300, which would be the equivalent of three contacts, right? And that's because the option part of this system doesn't work well. I essentially set up a stock account because you can do it with stocks. It's a lot easier. It actually fills accurately most of the time. And I just made it 10 times bigger than I would have been, because with options, you get about a 10-to-1 leverage, right? For every 1% of stock moves, your option typically moves about 10%. So it's $1 million account, but that's designed to mimic a $100,000 options account. We're going to stop at or above. We got to make it GTC. I almost forgot to do that. The guy that showed me this back, I just saw it last November. I knew about the replay history, but you can do this in real time, essentially. He said, use the GTC. Always, otherwise it fills right away. And I think I did it once and realized that he was right. So I just checked GTC. So how many shares or contracts? Again, 3 contracts, 300 shares, same thing. At or above 146.53, good till cancel. And I just hit submit order. This is a nice thing. You can put in notes here if you want a journal. I don't, but it will keep this for you. Literally, you can type in whatever you want. There's all kinds of default things here. You can delete it, type it in anything you want. You can put notes down here. I just hit a touch chart image. That way it takes a snapshot. What it does, it takes a picture of where the chart's at right now. So if you want to go back and look at it and reanalyze it, then you have a snapshot of that image when you pulled the trigger, when you place the order, right? It hasn't placed yet, right? Because these are the list of open orders I have right now in this system. And a bunch of these got stopped out yesterday because most of my trades are, this whole page was full. And you can see they're all short. And a lot of them got stopped out yesterday. So I gave back, I was up 30 grand or so on the month. And I think I gave back about 8 or 10,000 of that. Oh, we can go look. But these are the positions that are still open. And here's the nice part. So then where's the ANET? Is it ANET we just did? Yeah. So here's the order on it, right? So you can go cancel it. You can modify it here, but it shows we've got a buy order at 146.53. So that's the beauty. And then if you ever just want to get out and cancel the orders, you hit this F. F is flattened. So it closes the position and cancels any open orders you have. So I keep these up here. It's up here as well, but I like to keep it. This opens up a whole, I can have this window up here so I can see it. It's up on my other monitor. But then you can also double click them too. If you want to look through your trades, you can just double click and see where they're at. So here's some that have been the last couple of weeks. ACI, that hasn't stopped out yet. Coke is working out. Right, this one hit the entry point there at 63.43. Las Vegas Sands is upside down a little bit, but ooh, that's tempting to add more to it. Because look at this, we broke that support level. We broke it. We came back up, tapped it yesterday, and right now it's down a little bit. So it's tempting to add more to the position because I have a 10% rule. It says I can't put more than 10% of my account value into any one trade. That doesn't happen often anyway, but that's the max, right? So 1,000 shares on this, shorting it is 60,000, right? I have up to 100,000 to use, 103,000 technically. So I could add a little bit to it, which I do quite often, but I'm going to leave this one alone. MGM, that's starting to trail off too. But those are the ones that are active right now. So I'm going to send that, but we'll just put that one for ANET in. Trading platform I use is Toss. I use Thinkorswim for trading. This is Omega Charts. This is basically an end-of-day platform. They do have the streaming functionality, which is, it's okay. It's not a real-time platform. I wouldn't use it to trade off of. But this is the best end-of-day platform I've ever used. Maybe there's better ones out there, but I like it. I've been using it for 20 years now, 22 years probably. So, yeah, double bottom, double bottom, same thing. Yeah, that's what we're looking for. And the midpoint's right here. Right. For those of you that have been through patterns in Flash, you know that once it breaks that midpoint, then the odds are it's going to continue to run. So that's what we're looking for here. But yeah, going back to the question that Will answered is, what are the odds that this pattern plays out? What are the odds that this thing closes that gap? It's 50-50. 50-50. It's a flip of a coin. You don't know. And this is where the analysis process and creating a trading plan is where the skill comes in. Traders, pure luck. It's a 50-50 shot. You don't know what's going to happen with this thing. Neither do I. That's why I hate when people call me an expert. It's like, I can analyze. I might be an expert analyst, but I'm an expert trader. The trading part of it is just, it's a coin flip. You don't know what's going to happen. The skill set comes in by analyzing the chart, determining, is it strong? Is it weak? Is it a good pattern? Is there a potential here for this thing to make this move? And then you put the plan in place, and then the trader just executes the plan and just lets things go where they may. That's all it is to trading. Trading is really, it's the easiest, most difficult part, right? It's if you take that perspective on it, that I'm the analyst here and now I'm going to trade. That's part of the reason I just do my analysis once a week. And then the rest of the week, I'm focused on trading. And the trading part is easy because all you have to do is execute the plan. But it's excruciatingly difficult because executing that plan comes with this little thing called fear, which is right here. So executing the plan is easy. Managing and maintaining your fear, that's a whole different ballgame. And that is one of the toughest things you will do with regard to trading when you are trading. The analysis part, that's where the skill comes in. So the skill comes in analyzing. Trading is just executing. I think I said that already. God, there's Baba. So we're looking for, we got a descending triangle. If it breaks that support level, we got a target of about 63. Bank of America, same thing, descending triangle, which, just a heads up, be cautious with banks right now. Most of them, the volatility is a little bit, it's settled down some. But when you're trading options, one of the biggest things with the pricing factor and how they price the time value is volatility. If you're in a sector that's extremely volatile, then the time value is usually very expensive. The banking sector, with it being on edge, they've got a little more IV put into the options. So you've got to be a little more cautious with it, because there's a couple of different things that could happen. Number one, you're probably going to pay a little bit more premium than you would when the banking sector wasn't on edge. If something good happens in the banking sector, which I don't think is very likely, but it could, then there's probably a big short squeeze. Because put yourself in somebody's position. Maybe you shorted Bank of America back here at 35. It's now at 27. You're up $8, right? On, if you sold it at 35, your margin's $17.50. So what's $8 on $17.50? About 30, 35%, something like that. So you're up 30 or 35%. And you want to capture those profits, right? So if Bank of America takes off, there could be a short squeeze. So you got to be prepared for that, just in case good news comes out of the banking sector. I would lean towards the bear side, because I think the odds are higher that you're going to have bad news come out of the banking sector and it's going to drop. But you still have to be cautious, because you're paying a little more premium because of the volatility in the sector itself. Any sectors like that. If you go look at a lot of the biotechs, the small cap pharmas, their premiums a lot of times are very, very high. The time premium is because there's a lot of risk in them. So anytime you look at something and you say, okay, that's a lot of time premium. If you have more than 50% time premium over intrinsic, that's probably because there's more risk. I see all the time these newbie, like on Facebook, oh, this premium's so juicy, it's so awesome. And actually, there was a guy, I just saw, he posted his story. He was all excited about this huge premium he collected on SVB. Y'all know who SVB is, right? They're no longer. He sold $150 puts and he collected a juicy premium. This is 3 or 4 or 5 weeks before they went to basically zero. And so he got put to stock, and whether or not your option gets exercised is up to the market, right? He got put to stock at $150 and it opened up at 30 cents or something. He lost 150 grand. It was ugly. That's one reason I don't love selling puts, unless it's, I mean, if it's on a, but how do you know it's a stable company or not? SVB was touted as one of the best. Target is 2303. Yes, Robbie. Is it Robbie? I'm assuming that's how you say it. Or Robbie. I'm assuming Robbie. Roby. Okay, good. I'm glad I asked. I wonder, because yeah, your Robbie would be 2 B's. That's a good way to put it. Have you ever seen that? That'd be interesting. Bees rowing, right? He put ROWBEE. I love it. So I can know how to pronounce it. But yeah, bees rowing, put them out in a little rowboat. So BHP, I just realized I got to speed up a little bit. Otherwise, we're going to have time here. BKR, it's another head and shoulders pattern, right? This has been on the radar for a little while. It just hasn't broken the neckline yet. So Blackstone is also a descending triangle. I'm going to zoom out a little bit. So this is a big one, right? That's $15 of potential on an $80 stock. So if it breaks that 80 level, it may come down here. Comerica, this is a bank that actually caught this little draft. And now there's a double bottom there that we're looking at possibly. If it pops to the upside, then I'd be interested. If it gets back above that 39.70, right? Cognizant, same thing. This is kind of a pennant type of pattern, looking for a possible bolt to the upside. But it looks like the market's trailing off a little bit more right now. Yeah, Bernanke's speaking. That must be what it is. Caesar, this is a descending triangle, but created a plan for a potential breakout to the upside. If it comes down and challenges this level, then I would flip this plan over and look at a downside break. eBay. This is one that's kind of interesting, that you notice the rest of the tech sector has been bullish, and this thing's just gotten hammered the last few days. So even though most of the tech sector is bullish, this one's bearish. So it is weak when other in the sector are strong. So the odds are, if this thing rolls over, in fact, what's that at? What's it actually at right now? 43.32. It's actually a little bit below that. All right, you want to see it hit? I'm going to pull the trigger on this right now. It's off. That's good. I'm just going to hit it at the market. It's at, and that's what's goofy. It'll go off at what? 43.35 is the actual market, even though this is a little delayed, but it's close enough. I'm going to hit it. It'll hit submit, and then I'll attach the chart so I know. And now you can see eBay's in here now. So there's the weekly whispers. It's down $250 already, but that's because it filled at that price. So there you see how that works now. But let's pop through these real quick so we have enough time for the fun stuff. Well, I think this is all fun, but that's just me. ENB, double top, right? We've seen a couple of double bottoms. It's a little easier on line chart. The right cheek down, if you will. But essentially it hit the same spot and sold off. So even after, it looks like earnings, the market liked it at first. They gapped it up right after earnings. See a little E-bubble down there. It gapped it up. Bearish engulfing, dark cloud cover, boom, tank. It's a beauty of candlesticks at a resistance level. When you see these, and we broke that midpoint in a big, big way. So that's good. EQT. This one is at this point, a little late. We're waiting for it to see if it pulls back. Inverted head and shoulders, right? Breaks out with good volume. So everything about this right now is about as textbook as it gets for an inverted head and shoulders. The only problem is it moved so big yesterday that it's outside of the risk reward range. So I want to see it pull back anyway. If it takes off and runs to this, then you missed it. It is what it is, right? GM, double bottom, right? Little double bottom on it. It's a pattern we're looking at. Home Depot, ascending triangle, kind of. It's not beautiful. It's not textbook, but it doesn't always have to be beautiful in textbook. It's surprising where sometimes you find a kind of a wonky pattern. It's like, it's not that great, but it still plays out. Intel is a head and shoulders. You see the left shoulder, head, right shoulder, and the neckline. If it breaks the neckline, it's probably come down to about 25. This is another one. This is one of the big techs, right? And you've got Microsoft and Netflix and NVIDIA and Micron and all these other stocks. These big name tech stocks have been rallying the last 2 or 3 days. And look at Intel. It's like, we don't want to go anywhere. We're not that excited. So I wouldn't be surprised to see it break down this neckline, wait for the entry point for it to break the neckline, and then the target's down there. IPG, a symmetrical triangle. You get zoomed out on that puppy. Squeeze it down. I think this is an all-time high. Yeah, we're at an all-time high on that thing. And it's a nice symmetrical triangle. I haven't seen one like this in a long time. Usually you find these in bullish markets. So you don't see them very often. And this thing is at an all-time high with a potential. We're looking for about 43.5. Las Vegas Sands. We have this kind of a double top little, I don't really call it a head and shoulders. It's too small. When you go to a line chart, some people see this. They're, head and shoulders. Not really. It's too small. I mean, when you got a few days for left shoulder, a few days for head, it's not really a head and shoulders. But conceptually, it's kind of there. There's some weakness, and then you have a quasi falling through methods. And there's this support here at 60.80. So is it a perfect textbook pattern? No, I wouldn't even technically call it a head and shoulders. But is there weakness in it? Yes. And that's the key, is recognizing weakness. So microchip. This one, ooh, there's the big question because that's right there at the entry point too. Should we pull the trigger on this or wait to see if it pulls back? Considering that we had a pretty solid run over the last week and the volume got weak yesterday, I'm going to wait. It's dropping a little bit today. The market itself looks like it wants to maybe head lower. I'm assuming Will's right that Bernanke and Powell are not helping the market. So we'll wait. If it pulls back into this range and kind of dances on it, then I put a hook up here. And sometimes it's important to be patient and wait for that, because if we get in right here, it could turn around and take off, but it also could come down here and stop. And it's a 50-50 shot. We don't know. So I'm just going to be patient, wait, see if it comes down into this area. If it holds this line, then I'll put a hook up there. If it doesn't, it takes off without me, it's okay. MGM. This was an ascending triangle that broke down. So now we're looking for a bearish play down to about 36.5 or so. Morgan. There's a big giant head and shoulders. Giant head and shoulders. And it's sitting right on the edge of that thing. And there's a weekly chart. You see, there's still lots of room for that thing to possibly take off to the downside. So the trading plan is there. Target 71.16. That's about almost $10 of potential. Micron. This one's a little frustrating. Been watching this for, I don't know, what is this, 4, 5, 6 weeks now in this ascending triangle. And there it finally broke out yesterday, and I missed it. It's like, which, welcome to trading, right? It's going to happen. I don't care how long you've been trading. What's a hook? Oh, I got you. What was I? Put a hook down like a put an order. I placed an order on it. Which one was that? Was that MGM we were talking about? Microchip. Yeah. So if this comes down here and it holds that 76, or even if it just comes down here and dances around a little bit and stays below the entry point, then I'd put an order, a GTC, up here at 77.62 at my entry point. So I put a hook out there, so if it grabs it, right, it's just like fishing. Yeah, you throw a hook in the water. Maybe you get a fish, maybe you don't. You don't know if it's going to hook or not. If it doesn't hook, if it comes down here and it doesn't bounce back up and it breaks down, good. I don't want to be in the trade, right? So a pullback is not abnormal. It's got to break out. A little pullback to the old resistance is to be expected. So yeah, a hook is just throwing an order out there and seeing if it hits. Kind of like that on ANET. We did that. Put a hook out on ANET. If it hits it, great. If not, I don't care. I had 4 or 5 last week that I put hooks out. The trades didn't materialize, right? You're only going to have, this is 29 trades. Some weeks you'll have 10 of them trigger. Other weeks you have 2 trigger. You just don't know, right? It's a coin flip. So there's Oxy looking for a downward break on that. Possibly, we'll see. And sometimes you got to wait for a few weeks, just like Micron. I've been looking at that for weeks now, and it finally just broke. Pinduoduo was breaking down. There's a trend line in place. Was looking at if it breaks to the upside, it might go up, and it still could. And we don't know how the day's going to close out. Procter Gamble, double top, looking for a break to the downside. C Limited, this is another double top, basically a top here, right? Top there. Earnings was bad, so it came down. That massive volume created some momentum. I preferably would like to see it pop back up. And here you go, Brenda. If it pops back up here to the 73.50, then I put a hook here at 72.19. And then maybe I get a fish. As long as it's salmon and I can smoke it, we're good. Schlumberger, this is a wonky head and shoulders I really don't like, but that's the weird thing. Sometimes you find, you get candidates that you don't like and they play out beautifully. So looking for it to drop about 10 points if it breaks that neckline. I just don't like the slope on the neckline. And then TCOM, this one I was hoping would pop back up here. It didn't quite get to the old resistance, but don't know that's going to play out. Of course, if it broke down here, then I would adjust this plan down and just move it down to a lower spot. But now let's go to the oh, hold on, Brenda. I don't know if we're even going to get to that. I just realized I've got off on some tangents. So you can all look at this and see that. So there's the list, right? Same ticker symbols. I put all this in, all the numbers. So here's all our trading plans, risk rewards on all these, right? All 29 of these stocks are in here. So I'm going to slide this over and go grab one more thing. Now, what we're going to do here, and this is where For those of you that saw the whole 3-to-1 thing and we went, oh, that can't be right. Well, let's find out if that's true or not. There it is. And you can just Google this, and there's a whole bunch of them out there. I kind of like this one. This is the US Mint, usmint.gov. It's a coin flipper, right? All you do is click on it, it flips a coin. We have 0 flips. So what we're going to do is flip a coin. Remember, like I said in the PowerPoint, heads is going to be a winner. So we're going to mark it a 1 right there in the winner column. If it's tails, we're going to mark it a loser. And it's going to calculate whether or not, see, if we put 1 as a winner, it takes the profit right here, the 426, and puts it over here in this column. If this one's a loser, it takes the loss, the risk right here, it's $1, so it puts over here in this column, and then it will total it down here, and it will show us our percentage, our batting average, if you will, at the end, once we're all done. So I've done the analysis. I've created the plans. Here's my risk reward calculator. Here's my risk. Here's my reward on each of these trades. Now all we're going to do is flip a coin. And honestly, I don't know how this is going to turn out. Like I said, I did it the other night. We only did 10 of these. And it turned out okay. And out of the 10, the 2 biggest losers both lost. And we still came out ahead. We'll see if that happens here. Because I know some of you are scratching your head going, that 3-to-1 thing can't work. Ready? Let's flip it. Here's the first one. Heads. That's a winner. All right. We won on Alcoa. That one worked out. We flipped a coin. Another heads. Cool. We're way ahead. Are we? We don't know. And I'm not going to show you the final number until we're done. Because I don't know how it's going to turn out. I have done this. I haven't done it with the coin flip thing, but I have just played with this and thrown a bunch of stuff in there, and they do come out losers sometimes. So there's tails. I do kind of like this too. It shows you the percentage. Now you're 50-50. Oh, there's another heads. Or no, that's tails. And of course, there you go. See, Baba, out of this little bracket of 5 trades, Baba's the biggest loser, right? It's the highest risk and highest potential reward. Actually, both of these are. Look at that. ANET and Baba, $5, $4. The other ones are only $1 risk. And the 2 biggest ones we lost on. It's kind of what happened the other night, huh? Heads. And then we went on Bank of America. So out of 5, which actually, if you can do math, that's about $10 of profit and $9.50 of loss. So even though we only won on the 3 out of the 5 smallest trades, it's actually still up a little bit just by eyeballing it. Let's keep going because we are getting short on time. And I will go to spiders and Qs if we have time. Tails, that's a loser, right? There's a loser. What's BKR going to be? Now we flip it again. Put 1 on the top half of the card. Is that a loser? That's not a loser. I don't know what you mean, Will. Maybe I'm just another loser. Uh-oh. Now we're way upside down, right? And then there's another one. Out of that 5 group, that's the biggest loser, and it was a loss. There's a winner. That's a loser too. Well, that's 4 out of 5. That's not good. I'm trying to figure out what you mean. Are you talking about how arranging these? The symbols in those little groups of 5? I did that just to separate it so it was easier. Yeah, I'm lost, Will. Sorry. I don't know. I'm not sure what you're saying exactly. There's another loser. That's not good. Here is, there's heads. Ooh, one of the small ones we won on. How awesome. Tails, another loser. Tails, holy cow, we're getting hammered. This is what's called a drawdown, right? When you have a whole bunch of losers in a row, and it's really aggravating and really not much fun. And if you haven't been trade long, maybe you haven't experienced it, but I have, and it's definitely not a fun time. But holy cow, there's another one, the biggest potential one there, Home Depot. The biggest trade on the whole list we lost on. There, finally we got a winner. No loser. There we go. Finally. Flip it again. These things aren't flipping very good. Oh. Oh, is the coin flip software really random? That's I don't see why it wouldn't be. I mean, I would think so. I mean, we used a different one. Well, you were there last week, weren't you? Was it last week or the week before? It was I used a different one there. Excuse me. I mean, I don't see why it wouldn't be, but there's heads. There's a winner finally. Get ready for a loser. It seems like that's, yeah. It's crazy. Losers. Holy cow, we're getting a lot of, well, look, yeah, we got 65 tails and 35 heads. And this is not necessarily what I want to see. I mean, obviously, I'm trying to show you that, you know, how to be profitable trading, which we'll see if this plays out or not. Ooh, achievement unlocked. That's a heads. I don't know what that means. I don't know what we achieved. Another loser. And there's a heads. We're almost there. Tail, another loser. We only got one left. Woo! Palling around. Woo! I don't know. I've never used this site before. I just found it this morning. So you can see here 41 and 59. So 59% losers, 41% winners. You can see the profits and losses in each of this column, right? With losers and winners. What is it, Brenda? What is what? The coin flip or the risk reward calculator? These are all the trades that I'm looking at this week. And theoretically, let's say every single one of them triggered. And we either hit the stop or we hit the target, right? You just put on autopilot, entry, exit, stop, target, and they just randomly hit, right? We're just flipping the coin saying it's just a 50-50 shot because that's in reality what you have, right? It's the U.S. Mint, actually. Let me throw it in there. I think that'll get to you. It's for, I mean, it was designed for kids, but it works. Let me get an Altoid in. We got a few minutes left. You can just Google coin flipper. And there's tons of them. I mean, from a coding perspective, I'm not a software developer, but they're super easy to build, right? Yes, we are still kids, except here. You're going to feel like a kid when your mind's blown because watch, I don't even know what this number is. I know it's 41%, right? We had 41% winners, 59% losers. 41% winners, 12 winners, 17 losers. 12 heads, 17 tails, 41% winners. And we're still profitable by $8.50. I mean, you tell me. It's just purely random. You want to, and that's the beauty of it. And look at this. Even, I mean, in the first section, right? You took two out of the 5 biggest losers were losers, right? Down here, you've only got one. I guess that was a pretty good section there, but, and then Home Depot, you know, here's the biggest loser on the whole list of all 29 comes out a loser. You lose 745. And you're still profitable by $8.50. This is the beauty of risk reward. And what does it allow you to do? Just trade the plan. When it gets to the stop worrying about it. You know why? Because look at the numbers. I mean, all you have to do is follow your plan, do 3 to risk reward. And at the end of the day, this is 29 trades. If every single one of them hits and just randomly hits, that's what's going to happen. And we can do it again. You want to get a different coin flipper? Do we have enough time? Why don't you just go to Google, type in coin flipper. There's the one that comes up. That's probably Google's. Just random.org. There's the US Mint one I found. Here's the one I think we used the other day. Let's do a different one. You can see there's one. Just flip a coin. All right. Do it one more time just to see. Let's try it. We'll just buzz through this really quick and see how it turns out. Flip the coin. Tails, that's a loser. Heads, that's a winner. Tails, that's a loser. Tails, another loser. That's funny. Look at that. We lost on those two again. Tails, another loser. This one doesn't tell us. That's what I liked about the other one. It showed the percentages. This one doesn't. Tails, loser. Man, we are just on a losing streak on all these. But who knows? We might get. That's crazy. It's 2 out of 8. Makes you wonder if this is actually real. There we go. Finally. You know, the funny thing is that this is actually working out better than I thought it would, because we're getting more losers than winners by a decent amount. And you can still see that you're coming out profitable, which is the whole purpose of 3-1. Oh, there, hey, we won on the Home Depot. That's obviously huge. Now we might have a win streak. We had a series of losers, right? We had 4 out of 15 were winners. That was a really bad streak right there. Man, we're still getting hammered on the tails, though. Tails. Tails. Holy cow. 4 more. Tails. Tails. Gee, really? That's insanity. This will the calculator. All 4 of them losers. Holy cow! That was, you can see the bottom there. 9 of 20. Nine trades were profitable. 20 were losers. That's 31%. 31% accuracy, and you're still up $20. That's even better than last time. Last time was up 41%, and we're up 8.5. I mean, the one trade on the Home Depot helped. Obviously, that's pretty much all of it right there. This is the beauty of it. I mean, you can see I just did 2 different random websites, just flipping coins. And actually, this usually I would expect it to be 50-50, which if it is 50-50, that number is even huger. This even, I mean, it worked out worse, but better than I expected, right? I expected this number to be closer to 50%, but it wasn't. It actually just randomly came out at only 31 and still making money. Exactly, Michael. This is where, I mean, when you get a streak, I mean, here you have, out of these first 10 trades, only 2 were winners, 8 were losers. Huger, did I just say that? Or hugger? I don't know. If huger isn't a word, then it is now. I'm going to make it a word. I'm going to call my mom and tell her to put it in the dictionary. She's the English teacher. But, you know, reality, we can go, I have a 4-to-1 calculator here too. I put this in there just for fun. Should we do it really fast? We got a minute. All right, let's do it really. This is 4-to-1. So if you want to increase your odds even better, it's going to be opposite now. Watch, who knows? We're going to do this super fast. But while I'm doing this is, if you haven't done weekly whispers yet, this is why I would suggest at least go do the trial, because this is what I do in there. I mean, I just show you trading plans, usually 20 to 30 every single week. And then all you have to do is execute them if they hit. Of course, you should know, right? We have the old free trial, so you can do the free trial for 2 weeks, follow them, place the trades that, the ones that hit and trigger, place them and see what happens. I mean, not that what you can see in front of you isn't evidence enough that the risk reward thing works. And if you want to increase it, then you could go to a 4-to-1, which is what this is. So you're getting even higher odds. You only have to be 1 out of 5, right? But what you will discover once you implement 3-to-1 and you start actually utilizing what you will notice is how dramatically your emotions change and how much more relaxed you are. Because when all of a sudden you realize, you go, you know what? I don't care. I just placed 5 different trades and I don't care what happens to any of them. As long as one of them goes in my favor, I'm probably going to be okay. You may not be ahead if 1 out of 5, but you won't be underwater that much. The law of averages. Whoops, I didn't need to flip that, did I? That looks like about 50-50, but let's see. So this is 4-1. There's 57%. Oh, wait. No, that's a winner. Is that? Oh, that's 59% profitable of $83. So if you did 100 shares and every one of these triggered, you'd be up $8,300. That's the opposite. That's a huge win rate. That's with 4-1 too. But that's not even necessary. This is the beauty. This is why I use it. When I realized years ago, not only mathematically what it does, but what it does for this, that's the biggest piece. Because now you start placing the number of trades and you're like, it doesn't really matter to me what happens. Just go one way or the other. Just move. Just move. I mean, how much more would you just, if you knew you only had to be right? I mean, we were right 31% of the time and still up $20. It's mind-boggling. And honestly, people that haven't seen it before, because I show that in the PowerPoint, I show that part. They see this like, oh, that can't be real. Well, I just randomly flipped a coin. And this is how it worked out. We were 31% and way profitable. It's beautiful. From every perspective, it's beautiful because it does the biggest thing it's going to do for you is the emotional side, is allow you to just relax and breathe. And now you're like, I don't care how right I am. I don't have to be right. Being right doesn't matter. Being right is not an important part of trading. What is important is do some decent analysis. Your analysis doesn't even have to be perfect. And that's essentially what I do with Weekly Whispers. So if you want to focus just on the trading part, then go get Weekly Whispers. I'll do the analysis. I'll give you the trades. I spend 2 or 3 hours every week going through and analyzing and looking for candidates. Those ones you saw today are the ones that everybody that has, I know there's some folks in here that have Weekly Whispers. They're going to get that video at some point, probably in the next hour. Usually Nick has it out around 10 or 11 my time. So where I go through and analyze it all, we look at a little bit of option stuff, I look at the news, but it's an in-depth look every single week at here's the candidates I'm looking at. And I do find some squirrels now and then, but go do the 2-week trial, follow the trades, do them, see what happens, see how it plays out for you. And if it's worth it, then get it. I mean, it's a no-brainer as far as I'm concerned. So I'm glad, Tyler. I know it's funny because I don't know where it hit my mind a couple of weeks ago with the whole coin flipping thing. I saw it somewhere. And I thought, you know what, that'd be fun to do with that and see how it turns out. And in the Patterns of Flash class was the first time I did it. And I hadn't even done it myself before that. And then we saw it play out and it was like, wow. And I know that, there's a lot more folks in here that probably haven't seen it. And it is certainly mind-boggling when you recognize and realize, and when you can stop focusing on being right and recognize that maybe you're not an expert analyst, maybe you're mediocre, maybe you're brand new. The analysis part is not the critical piece. The better you get at analysis, then the better your trading candidates will be. But that's not the most important piece. The most important piece is putting on the trader hat and executing the plan that has the odds on your side. That's the critical piece, and sticking to that plan. And when you know that you don't have to be right that often, you can be wrong 70% of the time. All of a sudden you start to relax and just go, okay, doesn't matter. And I had that experience where I had both, right? Before I implemented this, I had some trades over here. And now looking back on it, I didn't think I was winging it, but looking back, I was winging it. Right. And I was nervous and anxious about the trades. I'm always watching them like, ee. And then I put on 2 or 3 or 4 trades with the risk reward, like you just saw. And that's when it hit me. I'm like, I don't even care about these over here. I think I had 4 trades on. Like if one of those goes in my favor, I'm good. I don't care. I'm not concerned about these. I'm not anxious. I'm not nervous. I'm just relaxed. And then I had these other trades over here that I don't have a 3-1 on. And those ones I'm concerned about. That's when the light bulb went off for me. So if you haven't experienced that, you can go do that. If you're not using 3-1, take your trades now, get some trades, create a 3-1 risk reward, follow my trades. Go get the Weekly Whispers, follow the trades that I'm doing. And if they trigger, they trigger. Some trigger, some don't. Sometimes, like I said earlier, 2 triggers sometimes, and other times in a week, 10 will trigger. We just don't know. And watch and see the difference in how you feel about the trades that you have that don't have risk reward and the ones like I did. So you don't have to, but obviously it works. It's clear. It's just simple math. But anyway, any questions real quick? Brendan, I'm sorry. I don't have time to go look at the spiders and keys. I'm already over. Miguel's probably, or Pauline, I mean, last night or the other night was Miguel. Sorry, Pauline. Any other questions real quick though? Thank you, Roby. Appreciate that. I'm glad you had fun. I know maybe I should do this more often maybe, but yeah, it's when it hits home with you, it really is mind boggling, and it will blow your mind at how much more relaxed you trade, because that's what it did for me. So, all righty, we're going to call it a day. Go watch this market. Hopefully it continues to tank, at least for me. Hopefully you're not, well, if you're in a bullish trade, hopefully it's going in your favor. There are some still things are going out. So you get into more trades because of this. Yeah, now you're not nervous to pull the trigger, right? That makes sense. Will says I get into more trades because if you're nervous and you don't want to lose, then you hold back. When you recognize that I don't have to be right and I don't have to win that often, yeah, that makes sense. You'll pull the trigger on more trades and be less worried about it, which probably ultimately ends up in higher profitability, because the more swings at the plate you take, the more hits you're going to get. If you don't ever step up to the plate and swing the bat, you can't get a base hit, right? So the more you step up to the plate, the more you swing, the higher your odds are you're going to get a base hit. And eventually you get a home run. So, all right, y'all have a wonderful weekend. We will see you very soon in wherever we see you at, whatever web shop we see you. So take care. God bless. Bye-bye.